Hi everyone, Brian Capone, the Capone for Your Home team at Keller Williams Philly. Wanted to give you a quick market update here as summer is coming to an end and we start our fall season. Pricing in the city is up about 25% since 2007. So it has been a good run, even through COVID and continuing with COVID and through quarantine. The city has done really well and pricing has increased. Now, the reason for that, and you've probably seen this in some of the papers, is basically really low inventory. There's a lack of inventory out there. Couple that with phenomenally low interest rates. Sub 3% on a 30-year fixed is absolutely amazing. And you're seeing many homes selling quickly and it being a seller's market. Now, what took me a long time to actually put this video together is on the ground in what I'm doing, not everything is selling immediately, right? If you have a nice home that's priced right in a desirable location, yes, chances are people will gravitate towards it and it will sell. But it doesn't mean everything is selling. There's plenty of homes, South Philly, an average home, something that maybe is priced a little high, that is sitting there. So you see these headlines sometimes that say, it's a hot seller's market, and the expectation is I put my house on the market and it sells immediately. That's not always the case. It is happening, it has happened, but it's not always the case. There's always those exceptions. So we're seeing a little bit of that. So what's driving the activity, the seller's market, and really this unprecedented uptick in pricing, even in these crazy COVID times. So you have the low inventory, you have the low interest rates. Anecdotally, you're seeing many more New Yorkers come into the area. I don't know if I'd put that as number 3 on my bullet point, but people are talking about that. And there's also this phenomenon that telecommuting, which obviously what most people were doing and are doing now, supports home pricing. You're essentially upzoning a property from strictly residential to quote unquote a commercial use. And when your work becomes a factor in your housing decision, the buyer is, or the homeowner is that much more likely to quote unquote do what they need to do to make sure they're in a good position within their home. So I don't know what kind of data I can specifically give you for that, but it may be more of a psychological thing, but we are seeing that as well. So that's a quick take on the market. I wanted to quickly mention suburbs not performing as well as the city in terms of price increases. Inventory is down there as well. It's just not as consistently down. So yes, you've seen an increase in pricing, obviously through the period I just said since 2007, but even over the last year, where Philly has performed really well, we're up like 9 or 10% over the last year. The suburbs isn't seeing that exactly, just because they don't have consistently low inventory like the city has seen. So more importantly, what's ahead? You know me, I look at the here and now, but I also like to talk to my people about what to expect moving forward. So we are seeing an increase in days on market, and we're starting to see that curve bottom up, and you're starting to see days on market go up a little bit. So that's something to be aware of. Another biggie is, I just heard an economist speak yesterday, which is really the foundation for what I'm talking about right now. Foreclosures in the future. So there's a moratorium on foreclosures, locally and nationally, and I don't know the exact dates or when that's going to pull back and where that works. But if you look at just overall mortgage delinquencies, they are up significantly. So a lot of people not able to make their mortgage payment, or maybe they're taking advantage of some sort of forbearance. I know a lot of lenders, a lot of banks are offering. They're there, but that next step of the bank saying, okay, well, we can't continue having you not pay your mortgage. At some point, we're going to start foreclosure proceedings. That has not happened yet, but when that dam breaks, some of us anticipate, a lot more foreclosures, and unfortunately, a lot more foreclosures, and thus more inventory on the market, which is usually an indication of a softening of pricing. So keep that on your radar. We're in the early stages of hearing about it. Election falls, I've talked about in the past, presidential election falls tend not to be the best markets. So if you ask me what's going to happen over the next, I'd say 2 months, I think we'll still be busy when we get into our fall market. I think this crazy schedule of virtual schooling and how parents and families are going to react to jobs and work from home schools, that's going to play a role. But as long as interest rates are low, there still seems to be a demand for real estate. So I think we're going to see that over the next couple of months, short of a really just slam dunk stop. Corona comes back big time, which I'm not saying that's not going to happen in the colder months in November, December, and January. That's another conversation. I'm just talking about over the next 6 weeks or 2 months. I think we're going to see that continued activity until we approach, I guess I would say probably mid to late October, and I would think we will see some sort of just standstill because people are going to wait to see how the election plays out. It's happened in the past. It's happened for the entire fall market in the past. I think we're going to see that happen right now. Same stakes in this election, if not higher. And I think you're going to see people do that. If you have some sort of contested election, I think that's just only going to, obviously, markets can handle good news, they can even handle bad news. What they don't like is unknown. So anything like that will really put things at a standstill. So that's what's going to happen through the election, depending on those results, depending how Corona plays out. We'll have to see what happens through early next year and beyond. So I'm not super cheery about that direction. I don't know if I have any more clarity in the video I made probably 3-4 months ago when we were in quarantine in terms of what's going to happen. I think it's been overall, we saw that, I'm not going to say a V-shaped recovery, but we saw that uptick in activity once quarantine ended. I just don't know if we're totally out of the woods going forward through the end of the year and into next year and into next spring. So one other thing that was talked about during this economist I heard speak was just kind of some of the civil unrest associated with the George Floyd movement and everything that happened there. And there was just some interesting points because people have asked me numerous times, are people leaving Philadelphia? Are they leaving Philadelphia or are they going to the suburbs? And I made I noticed some statistics about the suburbs, which you would say, okay, people are looking for a bigger home, outdoor space. They're going to the suburbs. I haven't seen that much. What I tell people primarily is anyone who's going to the suburbs or now going to the suburbs probably have a toe in the water, a foot out the door, whatever you want to call it. It was on their radar to begin with. I don't think this pushed anyone over the edge. But what this economist said was Philly can handle a pandemic. Most big cities can, and we can probably handle it better than others. And I agree with that statement. What we can't rebound from is civil unrest, continued civil unrest, a decline in public services and quality of life, and a decrease in tax revenue. So public services, trash has been sitting on at your curb for quite some time. Things like that, if that doesn't get changed, I'm not gonna say quickly, if it continues like that, that will be just as much of a driving force, if not more, to get people to say, you know what, this city living thing isn't working. I'm going to go someplace where it's, I have some of these services I'm looking for. And then to, piggyback on that, when you don't have, Philly's primarily revenue sources are not real estate taxes like they are in other cities. We rely on that high, business wage tax. So when people aren't working, businesses are closed, you're going to see those tax revenues decrease as well. So that's happening, on a municipal level, it's happening on a state level, it's happening nationally, it's happening all over the place. But if you have a continued decrease and a budget shortfall, that obviously impacts those services, and then that dominoes down to people and their quality of life, and the cycle continues. So just something I wanted to touch on because it was an obvious question a lot of people asked. I'm sure you'll probably get differing opinions on that. That's a little bit where I'm at. So I'm still here, still working hard, getting my sellers best price I can, selling it as short as possible, selling their properties in as short as period of time as possible, navigating buyers through at times a competitive market, getting people to take advantage of some really good interest rates. And obviously recommending people, if it works for you, try to refinance right now because rates are so low. We've always say that, and then they seem to go lower. But in this case, I'm doing it personally. So I would say, look into that. I'm here if you have any questions. We'll be working hard. Summer's pretty much over. It'll be a little crazy for me and my family, working from home, kids at home, but I'm here, and if you need anything, let me know. Brian Capone, the Capone for Your Home Team, Keller Williams Philly. Thank you.